Hey guys, what's up? Hope you guys are having a great day today. My name is Matthew Spazziti, and welcome back for another episode of the Weekly Market Analysis. So, I'm not gonna lie, to this morning I had a really hard time waking up. It's been rainy all morning long, and it's just been storming. There's been lots of thunder and lightning, and it's just one of those days where you just don't want to get out of bed. You know what I'm saying? You just want to sleep for the rest of the day because it's so comforting, so soothing and everything. I don't know about you guys, but that's how I always feel when it starts to rain, and it's always like this. You know, it's just one of those days where it's like, I'm so sleepy and I don't want to get out of bed, and I can sleep all day type of thing. But anyways, the day must go on, and so here we are at TradingView, at my TradingView profile, and we have a few trades, as you can see up here in the tabs. We've got 4, and that's pretty good, because honestly I didn't think we were going to get anything today, but we thankfully did. Let's first cover the Aussie USD, because this actually was a trade I took last week. As you can see, the blue line was over here. Let me see if I can zoom in on this for you guys. Alright, so we took this trade. So we found this trade on the 20th, and it had already touched my entry point. But I decided to go ahead and just place the blue line on there and the yellow line, and just see if we would get a retest. And we did. We retested that line on the 20th, the same day, but let's see. So around 9 p.m. on the 20th. And that's when we got entered, and fortunately, we were just kind of chopping sideways. We kind of closed, we broke down, kind of made a little bit of a gap, and then we ended up closing up right here. So we didn't close all the way down here, and then we rallied all the way. And look at that. That rally was really perfect, except for this big, red candlestick with this massive wick. But this is definitely, I think, what they call in candlestick patterns. I think that is a hammer. I could be wrong, but I believe this is a hammer. The big long wick, that's the handle, and up here is the actual anvil part, the metal part and whatnot. And I think that's the idea behind that candlestick. So usually this is a bullish sign. Typically you see this, right here, it's kind of hard to tell because I'm hovering over, this. But if you look right here when I move my mouse away, and here you can see the bottom part, the southern part of my crosshairs. Right there, this candlestick here is actually also a hammer as well. Normally, some people may say it's a doji, but dojis look more like this bad boy right here, where you almost have an equal candlestick length on each side, or at least maybe it's not 100% equal, but it's very, very close. That is a doji. That signifies market indirection or indecision. And but you can find that inside of this. Clearly the market had direction, but in this little blip right here, the few hours that this occurred in, you had a doji candle and stuff like that. But this one right here, this candlestick, you can see how we had a big wick up here and another wick here. You could probably say this is a doji candle as well. Again, market indecision and stuff like that. So I don't trade based off candlesticks and candlestick patterns. There are lots of people that do, and I don't knock them for it. I think it's pretty cool stuff. But it is good when you see that there are candlestick, bullish signals to represent what we actually saw in the markets. And it's just another form of technical analysis. You're just basing your stuff off the charts and everything. So it's really cool. So anyways, I wanted to show you guys that. So that fortunately worked out. I'm going to go ahead and close this one out. All right. So the next one is Pound New Zealand. Pound New Zealand I took here yesterday at around 7 p.m. Now, I placed this trade early in the morning. I was actually seeing, I came in probably around 8-ish. I got in the office around 8. And, it was 8 a.m. and I was seeing that it was making a new low here. So I figured, you know what? This is a very, very small retracement. If it did retrace, this would be very tiny. But I figured, why the heck not? It makes sense to me. So I figured, even though this is a very minor structure level, and in reality, if you were going to, in all honesty, measure from a major structure level, you would want to measure from here to here. But a lot of times, unless, if the market is really a strong trend, it's not going to give you that kind of a retracement. In fact, the only retracement it might give you is from these little, minor structure levels as well. As long as the structure, and I'm fine with taking these trades so long as it closed below the recent lowest, recent lower low. So right here, we closed here, which was for this red candlestick right here. You could see that we closed right here, which was in fact lower than this wick. So we made a new lower low, lower close. We actually had another candlestick right here that closed even lower than that. So this was a new structure low, and then we retraced. So if I had seen this, and unfortunately I did not, but if I had actually seen this, we would have just barely missed the 618 fib retracement level. But if we had hit it, that would have been a valid trade. So you would have seen something around these lines, right? This is what it would have looked like. So this would have been a valid trade had it just been a tad bit higher. Same kind of goes from here. We made a new structure low, new lower low, lower close, retraced. If you had gotten a 618 fib retracement, which I believe I measured that, I don't think I would have, but you kind of get the idea, right? So every time you make a new lower low, lower close, it's okay to look for a retracement and to get into a 618 fib retracement. At least that's how I function with regards to my trading strategy. And I think we would have missed out here. Let's measure this one real quick. Pretty sure, yeah, we would have missed out there for sure. And then now this one we would not have. This one we hit the 618 easily. Very easily. So you would have gotten involved in this one and you would have made money. And now we did it again. So I would have made money twice. The problem is this one didn't come to fruition until the 21st, which was, I believe that was Sunday, right? Yeah, okay, it was Sunday. That was Father's Day. So I wasn't actually watching the markets at all. And to be completely fair with you, the data, I believe, most U.S. brokers wouldn't have even been allowing for data to go through. Most U.S. brokers on the weekends close up shop and basically pause data. So a lot of times U.S. brokers, even though technically speaking the Forex market never closes down, it's a 24-hour market. You can trade it at all hours of the day. When it's the weekends, the U.S. brokers close down and they stop transmitting data, which is why we kind of have this gap. You see, this came on the 19th, which was a Friday. Let me double check that. Yes, it was a Friday. So this came on the Friday, and it was 3 p.m. in the afternoon. So that's like when the brokers stopped transmitting data, and then when it came back on Monday, they transmitted data. And they transmitted the data that occurred over the weekends. And this is why you got this tiny little gap here. So we kind of gapped up here. And I don't know, maybe there genuinely was a gap. I always thought it was when it comes to the stock market, a lot of times it's because there's pretty major price fluctuations within the day, and sometimes it has nothing to do with the fact that the brokers were closed down and not transmitting data, and sometimes it did. So that's my thought process at any rate. But the point is that we ended up gapping up. If I had been watching this on Friday, I very well could have placed my entry up here, and I would have gotten filled, and I wouldn't have had to look at it. But yes, I could have swore I was looking at this on Friday. I very well may not have. I probably wasn't. Otherwise, I would have caught this one. But that being said, this trade ended up working out for us. So, we had a 620 fib retracement. We came all the way up here. Looked like we were going to get stopped out. As you can see, that big green candlestick. And luckily, we just barely missed getting stopped out. And we ended up rolling over. And this trade, hypothetically, made me around $87. Again, it's a hypothetical trade. This is all just practice and stuff. But yeah, $87. So not too bad. The Aussie USD trade that I took previously, let me pull the chart over the analysis spreadsheet over here, made me about 121 hypothetical dollars. Would have been really nice if that was real. But then again, I would not be touching this trade if any of this was real, because very clearly, as you can see, the markets just this trading all these different currency pairs when none of them are back tested, or maybe only like 2 or 3 are back tested. Not a good idea, as you can very clearly see. We started out with a $3,000 account, and I believe at the start of it we actually went higher and we were above 3,000. Oh yeah, look at that. You see, we were 3,400. I mean, so 3,600 right here. So we were above $3,000 at one point, and then eventually, we just continued to trade. And there's a lot of currency pairs in this portfolio that do not have a positive expectancy. So that's just unfortunate, but that's just, this is why I wanted to show you this. This is one of the many reasons why I wanted to show you guys the realities of trading a portfolio, trading markets when you don't have it backtested. Yes, I have a strategy that I created and I have written out, but I actually don't have I haven't backtested it. So I don't know whether these are positive or negative. I don't know if it's profitable or not profitable. I have no idea. Here's what I believe is going to happen. This is going to drag this account to zero. And when it does, we'll stop this whole thing, and I will hopefully be done with my back testing at that moment, and we'll actually start trading forward testing on the positive expectancy, the pairs that I have on the positive expectancy, which would be somewhere around 5 or 6 pairs. So we're not going to have this massive currency pair list that we have over here. I mean, I'll still keep this list. You'll still see this, but I will only be trading 5 or 6 pairs out of the list. I'm not going to be trading all of them. And then once we're done with this, I'll start another Excel sheet, and we'll kind of go from there, and we'll do that for about 3 to 4 months just to give us an idea of how profitable it is after back testing. This is called forward testing, and it's incredibly important that you guys understand it, because forward testing is how you try to confirm your back testing over historical data, okay? So that said, this trade ended up working out really well. I'm very happy about it. Let's go ahead and do that. All right, now we're on to the New Zealand yen. This trade, as you can see, we've got a hammer right here with regards to this candlestick, and we had this big motion up here. I mean, I'm going to be completely honest with you. I really do not know what's going on with this, but we kind of did exactly what happened in the Aussie USD, where the market came down. Actually, I'll just show you guys this. Aussie USD, where are we? Right here. All right. I think it was the Aussie. Yeah. So we kind of came down, we closed up, we gapped up, and then we rallied, right? So this is starting to look very, very similar to that. We gapped down, we closed up. We didn't close down here. We kind of closed up, and then we ended up, rallying all the way up here. Now, so I'll be completely honest with you. We're finding support right here. As you can see, we never closed below this point, right? So I actually didn't take this trade because we closed below this point, because that never happened. I took this trade because I closed below this point, right? We closed below this structure level. Now, I don't know, maybe that's splitting hairs a bit for me. Technically speaking, I don't know if I should have taken that trade, because we could get caught in a double bottom, which it's let's look at the 4-hour chart. That's kind of what this looks like it's going to be. This looks like a double bottom. So this is either going to rally and stop me out and end up breaking above the V, and then continuing higher. That could absolutely be the situation, or it could get rejected and fall over. I don't really know. This could turn into a triple bottom as well, and we could get another retest of this 68.17 price level over here, and that may actually allow us to make some hypothetical dollars. But I'm not really seeing any positives. I'm seeing that we're bouncing off of this support level, and we're going to probably get stopped out. That's my opinion of it. I hate having opinions like that of my own trades, but you got to call it how you see it. And I just, considering what I just saw on the Aussie USD, I'm not feeling overly confident about this, because this is showing me the exact same signs. We have a bullish, candlestick indicator. I have bullish hammer candlestick right here. Again, that's a pretty bullish sign overall as well. And we also have the fact that we're bouncing off support. And I guarantee you, if I was to zoom out, well, actually, I'm not really seeing a whole lot in the way of... Okay, if I was to zoom out here, we have support here, found a little support right here, nothing really there. So there's not really a whole lot of support in here. It's not like you can look left and structure leaves clues. Yes, that is true, but I'm not seeing a whole lot of support. So, but this apparently is a support level that it valued. And, if we kind of zoom out all the way, I mean, if we look at what's actually going on here, in my mind, I see that we have been trending bearish. We've been bearish for a long time, making new structure lows. And now this is just a retracement. This is a very big retracement inside of this trend. So this could lead me to suspect that this could be a reversal. Yeah, we went all the way up into 786. Usually when retracements go that far, that usually indicates a reversal. Well, I shouldn't say it usually indicates a reversal, but it can. It can indicate a reversal when the markets trend that high. So, I don't know. Honestly, like I say all the time to you guys, you can do all the work in the world, all the back testing, all the forward testing. You can know what your numbers say. But when you actually come into the markets and take the trade, in reality, there isn't a whole lot you can do, right? You are effectively, taking a gamble. Now, don't confuse this with me saying that it is gambling. Trading, I don't believe is. But in the end, you don't really know the outcome. Okay? Everything, you've done the statistical analysis that needs to be done in order to confirm that there should be a positive expectancy statistically with your trading strategy, but you haven't exactly, but that doesn't mean you know the future. That doesn't mean you have a crystal ball, and that doesn't mean you're going to be right all the time. So when you take a trade, even though you may have done all the necessary legwork, you're not always guaranteed to win every single trade. But that's why you do the legwork. So okay, you're not going to win all the time, but how often do you win? I mean, so far, I know that when I did my back testing on the CAD Swiss, it was only like 51% accurate. Yeah, only 51%. I only won 51% of the time. But that 1% was enough to end up making me money. I mean, I took a $3,000 account in the CAD Swiss, hypothetically, over historical data, up to $5,000. That's actually pretty good. But the CAD Swiss at the beginning was downtrending. I was losing money for a while before we actually did that. So, and that was over the course from, I think that was back tested from 2010 to 2012, and it was over 100 trades. So it was like a little over 100, so maybe like 101, 102, somewhere around there. It was around 100 trades. So that was that's what I found. Now, granted, I do feel like I may have backtested a little farther back than what I would have liked. I think I should have backtested more like in 2017, so that by the time I was done, I ended in 2019, just to see if it still works. But, my time is limited, and I don't have a lot of time to basically do that. I had to move on to the next one, which was the Euro-Yen. And so far, the Euro-Yen is looking like it's not going to be profitable. Now, unless I was to switch it and I was to place a target where the stop loss is and place a stop loss a little bit where the target is. But if I was to do that, you're looking at a situation where I don't really know how else to say this, but you're looking at a situation where you'd have to finagle the numbers that, if you were to reverse how you're looking at the trade and you were to bet that your trend continuation analysis is wrong on the Euro-Yen, what you would have to do, your entry could still go there, but what you would do here is instead, I'll actually show you guys, put 10 pips below the low of where your target would be, so that would be 119.21. And then you would have your target, you have to have your target higher than here, because you're already knowing that your risk-reward ratio is out of whack at this point. So you'd have to have it significantly higher. So how we would get this number is we would do a fib extension, I would think. So you'd start here from the structure high. Did I do this right? No. Dang it, I always do this wrong when I do this. We have to start here from the structure low. Okay. Swing high, or swing low to swing high, and then back down in. Alright. And then your target could be the 127 fib extension number, or ratio level, right there. Okay. So the reason I use this on the Euro-Yen is because the Euro-Yen is exactly the trading strategy where I'm consistently wrong all the flippin' time. So I wanted to use it on a currency pair that I know that this might actually be doable. And as you can see here, it is a 1-to-1. It's a 1.02. So you are going to make 0.02 more than you're risking. And that is the reality of this. Now, this may end up falling and stopping me out right now, and that may actually very well be the case. What's really going on, and that would be one way that you could invert the trading strategy if you're trading and you just don't have a positive expectancy on the current trading strategy you're using. With regards to mine, at least, I could reverse it and I could trade it opposite of how I trade everything else. The only problem is you don't want to do that a lot, because it would be far better, in my opinion, and I still might end up trying this, I don't know, but I think it would be far better to just find currency pairs that actually work, and not to try to mess around with currency pairs that don't. And that's my personal opinion on it. But that being said, I still might try. But I'd have to back test it all over again in that way and see what it is. Because now, instead of just looking for here, I'm waiting for the freaking price action to get all the way up here. That, because I'm waiting for it to be so high up there, that may not actually work. And that may not actually be profitable doing it that way. So the only other solution that you would have is not putting your stop loss under here, but putting your stop loss higher up and then keeping your target up here. But again, as you have seen many times with my trading stuff, ultimately a lot of times we get filled and then we just chop sideways. So the euro yen here is actually a bit of an interesting situation. We're not actually short here yet, because we did come up here and we put in what appears to be like a tiny little double top. But what you can see, well, actually, this is really more of a retracement. Double tops come on bullish trends, and this is not really enough to be classified as a bullish trend, in my opinion. But one thing to keep an eye out for right here is just that we did have a hammer, which I don't know if that's going to mean. I mean, sometimes these candlestick indicators don't really do a lot for you, so which is why I don't use them. And I haven't really tested them to know the consistency. But from what I've seen, just because you get a hammer doesn't exactly mean it's going to go higher. But I mean, hey, it already did go high, a little bit higher, right? That said, though, what I'm seeing right here is that we came up here, the market's looking like it could be losing momentum, and it's going to continue to go down. This looks like a pretty typical trend continuation pattern in my mind. The only trouble is that when you look out here, what's really going on? Well, we were bearish for a long time, and now we're kind of looking like we're reversing. So are we going to continue lower and continue that bearish trend, and this was more like a false breakout type of thing? Or are we going to continue to go higher? I don't know. I really have no clue. But what I am seeing, we broke below, making a new lower low, lower close, and we were retracing. But I unfortunately missed these three candlesticks touching my 618 fib extension level or retracement level. So I placed my big blue line over here, and I'm hoping that the market will retest this and then fall over. It's kind of a bit of a long shot. I think I probably will, and if this rolls over, I think I'm not going to get a second chance. This is, I think I just missed it. And that happens a lot, That happens a lot. All right, next is the pound CAD. Guys, the pound CAD is looking like it's going to stop me out. I measured from this structure high to this structure low, and reality, and I know you're going to expect to hear this, but this is a minor structure level. Okay, it is a very minor structure level. Now, I remeasured from this structure high to this structure low, and that's what this orange entry level line is. This is a second entry level. So if this gets stopped out, I'm going to hold out for this one and see what happens. But I'm pretty sure this is going to get stopped out. This is not looking positive. I mean, we could get rejected and roll over, and that would be wonderful, but I don't know if that's going to happen. Not with this big green candlestick right here. That's a bullish engulfing candlestick. And that's usually a bullish sign. Whenever you have a engulfing candlestick, engulfing candlesticks are like really big candlesticks with relatively small wicks. So like this green candlestick right here would be considered a bullish engulfing candlestick. And as you can see, it only went a little high and then it rolled over. Right here, this is a bearish engulfing candlestick. This is a bearish engulfing candlestick, even though with the small wicks on both sides, it's still engulfing in my opinion. This right here, when you actually see this one, I'm going to zoom in here. This is a pretty cool candlestick. This is called a shooting star. Normally, this is a bearish signal, okay? And normally you see it at like the top up here or somewhere at the top. It usually means that the market came all the way up, and then the bears beat it down and whatnot. If you want to think about it like bulls, bears, as in like a sports team or something. But that is usually a bearish sign. As you can see, we did go lower. So I'm not trying to say, I know I'm talking about candlestick patterns or candlesticks as like I'm really tempted to play around with them. I'm really not. I know about them. I know about some of the basics of them, and I just wanted to highlight them. If you guys are interested in that, go check them out. They're cool stuff, and I don't disagree with them. I just don't use them in my trading. Okay, so I just don't use them. So if you guys want to use them, then just make sure you're testing them. But yeah, so this is the trade. We broke below the structure level right here, made a new lower low, lower close, and now we're kind of coming back in, and I'm kind of thinking because of this green candlestick, we're going to continue higher, and I'm going to get stopped out, but I don't really know for sure, so we're just going to have to kind of wait and see. And that, ladies and gentlemen, is all she wrote. That's pretty much it. I don't really have a whole lot more to do. That's all I got for you today. Unfortunately, well, I don't know. I say that's fortunately. We went over 4 currency pairs. Things are looking pretty positive. It's not too bad. So, I don't know. I think all in all, it's looking pretty decent. So, hey, I'm happy about it. I'm very happy that we ended up getting we ended up finding 3 different currency pairs, and one of them was a winner already, and then the Aussie USD was a winner, so that was great because I suffered a lot of losers last week, and I think the week before that. So, I'm really, really happy that we had at least 2 winners. As you can see on the charts here, as you can see on my spreadsheet, we have a lot of open trades, okay? All right, we got a lot of open trades that are here right now. So, I mean, it's about eight open trades, yeah? So, 8 open trades, they could all be losers. And honestly, from what I've experienced from just here, they very well could all be losers. Especially like with this one, man, look at that. Ugh, just nothing, just bleeding red. Actually, it got worse. It's like, look at that. Just bleeding red constantly. So, yeah, they could all be losers. Maybe there's going to be a winner or two. If this one is a winner and that one's a winner, that could be it. So I have no idea what's going to happen with it, but it's kind of exciting. At least I think it's exciting. I think it's fun. So we'll just have to kind of wait and see, guys. We'll just have to wait and see how it all kind of works out and whatnot. But, that said, guys, that's just trading. I hate to say it. I certainly don't mean to turn you off of trading or anything, but that's just the realities of trading. And in all honesty, it's not all perfect. It's not all easy. It's not all candy and ice cream and whatnot. Trading will test you. It will. It will test you a lot. So it's really, really, really important that when you get into the whole trading and this whole trading lifestyle, this whole trading, stuff, this trading career, it's really important that when you get into it, you need to be very, very, very sure that you know what it is you're getting into. Make sure that you're doing your testing. Make sure that you understand the emotional strains it's going to have on you. If you're the type of person who has the emotional capacity of a teaspoon, I wouldn't recommend it. You need to have a strong emotional fortitude. You need to be able to sustain losses emotionally, because that's what's going to happen. I mean, look, the bulk of what I take on this is losing. Now, I know it's not a consistent. I haven't backtested all of these pairs. In fact, I've only backtested the Aussie CAD, the Aussie USD, and the CAD Swiss. Okay, so I'm well aware. I'm well aware that I haven't backtested a ton of them. But still, that said, though, I mean, it's tough. It's really, 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 really tough. Okay, it is not a something to do. It's not something you want to jump into lightly. You don't want to jump into this lightly. Trading can be very, very a tough career to get into, but it can be very rewarding. So, and on top of it, it helps you to become financially free, which, you know, I think is a very, very positive thing. I mean, when you are a trader, you are controlling the source of your income, which is owning the product or service that you are selling. Now, you're not really selling a product or service to a person, right? You control a strategy that has a consistent performance that consistently produces you money. Now you control the source of your income. Okay, so you're not even buying or selling anything from anybody. I mean, you are buying and selling on the markets, but you're not like selling a course or a service that you're offering. Now, if you are into that and you want to teach other people how to trade, then you can absolutely do that. That's something that I want to do in the future. When I become a consistently profitable trader, I absolutely want to, teach how to trade. I want to teach people how to do it. I mean, which is one of the reasons I'm doing this. I'm showing you guys my journey so you guys can see the realities of it all. And I guess that kind of brings me into a good segue, a good of a topic that I want to talk to you guys about. I wanted to share with you my journey and kind of give you guys an update of where I'm at, what I'm doing, and whatnot, and just how everything is going. So first and foremost, you're looking at this on TradingView. If you're listening to this in the podcast episode, then you're not going to see this, but go check it out on the YouTube channel, the Weekly Market Analysis, the most recent one. I don't even remember the number, 26, 27, somewhere around there. I'll be honest, I don't remember the number of this Weekly Market Analysis video. But that said, well, you know what? Hold on. I'll look it up real quick. Hold on. Okay, turns out it was the 27th episode. So if you're interested in checking this out and actually seeing it in video, go to my YouTube channel, Matthew Spazzini, and go check out the episode 27th of the Weekly Market Analysis video. So as you can see here, we've got 87 followers, so we're doing pretty good on TradingView. We're consistently getting more followers, but if you're on YouTube, you will notice that we're only at 28. YouTube has been very, very, very difficult to get followers to. Just producing content, I usually try to produce 2-3 videos a week. And I mean, I can't do one every day. I'm taking care of my 8-month-old daughter, so I can't really do that much in the way of content. Now, as a result of that, I actually had 29 subscribers. I ended up losing one. Not really sure why that happened, but, that type of stuff just happens. But now I will say this is the most depressing thing about YouTube that I have found is that I was sitting on 29 subscribers for like over a month. And then one of them ended up leaving. Well, it's really hard to continue to produce content and continue to do this stuff when you know that you're not getting the traction that you want. That's very, very difficult. I'm going to tell you right here and right now, that's very complicated. It's very difficult to do. It's not easy. I very much have a very hard time with producing content and not really seeing a lot of performance coming out of that content. So, and that's exactly what I'm seeing. Now, I'm trying to do keywords. I'm trying to do some SEO. But in reality, guys, YouTube is just set up to benefit those who are willing to pay for advertisements. Right? And even then, I don't know how fast you would grow your channel, but I know that is one way that you would grow your channel is through YouTube advertisements, which is what I'm going to do because I got a blog, newmillenniumwealth.com, and every now and then we'll get a spike of maybe 7 to 10 people that are visiting the blog. Every now and then you'll get like 1 or 2 people that visit the blog. But for the most part, you just don't get that many people that are visiting that blog. And I've got blog posts, and I actually post all of my podcast episodes there. I haven't been very good about posting all of my videos there from YouTube, although I am trying to post as much of them there as I can. I just haven't been very good about doing that. So I really need to be better about that. And that's another thing too. So far on this journey of becoming financially free through blogging, through doing YouTube videos, through trading and stuff of that nature, what I have realized is that it's a crap ton of work for very, very, very little performance. And I guess one thing that has stuck out to me so far is that I've been doing this full time for maybe a couple months. I haven't been doing it for, well, technically I started it over a year ago, but I wasn't really doing it full time at that point. And I really only started doing it full time this year, but it was much early. Well, no, it was it was earlier in 2019. And then I started doing stuff full time, but I didn't really know what I was doing. You can actually look at my older videos and you can kind of see they're not as good as I would like. And I mean, I actually did videos where you actually saw me in person. The camera quality is poor. The lighting was poor. You could see the reflections of lights in my glasses and stuff. You know, a lot of that was just space. I don't really have a dedicated, well, at the time I did actually have a dedicated studio. I don't have a dedicated studio anymore. Now I share my office with my wife because she's working from home due to the whole virus, which is fine, but I don't really have my own office, so I can't just set up my studio, my lights, my camera, and I am actually borrowing a camera. See, one thing that I really hate is camera quality. I hate my I bought a Canon Vixia something or other, and I have to be honest with you, it's not a very good camcorder. I mean, for outside use, for personal use, it's probably fine. But when it comes to professional videos, it's just not very good. It's the images appear grainy. Honestly, I think my cell phone could do just as good of a job, if not better. So, you know, I was kind of disappointed that if you're going to get into all of this, if you're going to get into YouTube, personal advice, buy a nice camera, spend the extra money. Don't go into debt for it, but definitely spend the extra money and get yourself a nice camera. I've heard that the Canon Rebel T6, I think it's a Canon Rebel T6 is a very nice camera, but that's like a $400 or $500 camera, depending on where you're getting it from. I mean, on Amazon, even the used ones are around $400 or $500. So not the cheapest, but that's certainly not the most expensive either, and provides good quality, and you can buy some really nice lenses to go with it and things of that nature. So something to keep in mind when you're looking to get into all of this. But guys, this is difficult. This is hard. Okay, I'm going to start doing YouTube ads here soon. I actually borrowed the previous generation camera, the Canon Rebel T5 from my sister, who was getting into photography and stuff. And so I borrowed that from her, and I'm going to check that out and see if I can make that work, because I don't want a crappy image when I'm going to be paying for YouTube advertisements. I'm going to try to pay for YouTube advertisements for this channel and see what happens, and I'll definitely keep you guys in the loop there. But for the most part, this journey is very difficult. What makes it even harder is the fact that I'm not a consistently profitable trader, so I can't claim that. I'm claiming that I'm on my journey. If I was already making lots of money, pretty successful, consistently profitable trader, you know, if that was my situation, then this would be different. This would be very, very different. But unfortunately, that's not the situation right now. So it's one of those things where you're going to do a lot of work and you're not going to see a lot of performance. You're kind of kidding yourself too if you're never going to pay for advertisements, in my opinion. You're going to have to. If you are going to start this kind of stuff, if you're going to start a blog, I mean, unless you've got the full time to just pump stuff out to social media and whatnot. I mean, is it possible to do it for free traffic? It is, but it's hard. It's very hard. And it's like a full-time job of it in itself just to do a lot of that stuff. Because creating the content takes a long time, let alone promoting that content on social media. Takes even longer, if not just as long. So you're really trying to operate and do two full-time jobs. I mean, social media work is difficult because there's so many different social media platforms that you have to get everything out to. They all have different formats for their featured images, and they all have like different keywords that you would want to use. It's all very, very difficult to do, and none of it is easy. I mean, it's simple, but hard. And so I don't know. So that's my whole bit. I was actually going to get into retail arbitrage on Amazon. I don't know if I've talked with you guys. I think I maybe have briefly mentioned this in another video. I decided to give that up because simply I don't have enough time. So I actually did a video of it on my YouTube channel, and I decided to take that playlist down and that video down because I didn't have enough time to continue to teach that and to talk about it. So right now I'm focusing mostly on trading. This channel, for those of you who are watching this and who have been subscribed or who've been here for a bit, it wasn't supposed to just be about trading, and it probably won't always just be about trading. There will be other things that I do on here. There will be a lot of other stuff that I do with regards to, like, we'll talk about personal finances, we'll talk about entrepreneurship, we'll talk about blogging and doing video stuff, doing ads and just doing, YouTube stuff. We'll talk about a lot of different things. It's not just supposed to be a trading only channel. But trading is definitely going to be the primary focus, I will say that much. And you can very clearly tell the trading videos are by far the easiest ones. All those other videos, I'd like to be in the actual video itself so you guys can see me talk and all that kind of stuff. But, so I don't know. That's a quick update. I'm also doing a podcast as well. Unwittingly, when I started this, I created newmillenniumwealth.com. And I didn't really think about it when I created that, but I really should have created MatthewSpazzini.com because now I'm effectively growing 3 different brands. I'm growing the Matthew Spazzini brand. I'm growing the Matthew Spazzini program brand, which is my podcast. And then I'm also growing the New Millennium Wealth brand from the website. And I didn't mean to set it up that way when I got started. That's just kind of what happened. I just was looking for a website. I didn't even think to put the website as my name. I just thought, no, New Millennium Wealth sounds cool. And then as I continued learning more and more and more about this stuff, I was like, oh, actually, no, I probably should, go ahead and I should use my name to grow my personal brand. But I didn't think about it when I created it. And then I moved on to, then I tried to kind of switch it up. The TradingView account, I switched it to Matthew_Spazzini. I've got Matthew Spazzini as a YouTube channel, but then I had New Millennium Wealth. Actually, when I first got started, I actually ended up paying somebody to promote my Facebook and my Twitter page that I had. I have a New Millennium Wealth Facebook page, and I have a New Millennium Wealth Twitter account. And I actually was paying someone to do those, and unfortunately, I don't know, guys. Just unfortunately, now I have New Millennium Wealth as a brand, and it's kind of like my blogging brand is the way I'm using it right now. Is I want to drive people to it for my blogs. But unfortunately, the bulk of the content that I'm making is for the Matthew Spazzini brand and the Matthew Spazzini program podcast, which is a whole other YouTube channel. It's called Matthew Spazzini Program. If you want to check it out, hop over there on YouTube and go check it out. But that's the interesting journey that I am on. And I've already made some mistakes. Those mistakes have made my journey significantly harder to have to handle. But yeah, that's kind of it. That's the gist of it. So I don't know. I just wanted to kind of share with you guys my update. Things are still going great. I'm still happy. I'm still happy that I'm doing this. I can't imagine doing anything else in my life. I'm really, really, just excited and just stoked that I'm doing this. But I wish the performance was better. I wish that I was seeing more performance from the amount of work that I'm putting into it. And so far I'm not. So I'm going to try some YouTube ads, see how that goes, and kind of go from there. I don't know if YouTube ads are going to be like a magic bullet. I kind of doubt it. I don't think they're going to be a magic bullet at all. But, it speaks a lot towards the idea of keeping your expectations low. A lot of people that get started on YouTube, myself included, thought that I'd be posting videos and I would gradually acquire more and more subscribers over time, and it would be like a small, steady stream. That was what my expectation was. Nah. Not going to happen. In all honesty, you're not going to be in that boat. It's going to take you years to get anywhere. I mean, you're looking at most channels that I've seen didn't start getting big until 5 years down the line. Like, they didn't start having massive amounts of views on their videos and subscribers for 5 years. That's actually pretty common for a lot of videos. Now, I've done some training, YouTube ad training and stuff. So, hey, at Skillshare, I actually have done a YouTube ad training program. And I can tell you that the guy that did the training, which I thought the training was actually pretty good. So if you guys are interested in learning a new skill, whether it's blogging, email copywriting, or maybe YouTube ads and how to grow your YouTube channel type of thing, go check it out. Skillshare.com. I'll put a link in the description below. Yes, it will be an affiliate link. So just keep that in mind. I will be compensated, but if you enjoy what I'm doing here, consider contributing in that way. It's pretty cool stuff. It's a great way to learn, and to learn a lot of different skills. And it's dirt cheap. It's like $100 a month, or not $100 a month. That's not cheap. It's $100 a year. Okay, so it's really not that expensive. But that being said, though, in the video he said that keep your expectations low when you're getting into YouTube, because he said it can take 1 to 3 years. And I think he was even putting that a bit of a positive spin on that when he said that, because I've seen people, like I said, who don't perform well till like 5 years down the road. So it takes a long time, and it doesn't have to take that long. If you're using YouTube ads, supposedly it can go faster. I don't know how fast it can accelerate. I guess it depends on how much money you have. But if you even have like $30 a month, you can grow your channel. Do $1 a day. For your YouTube ads. I mean, you're probably not going to go very far with that, but, you might attract some people to your channel. So consider something around those lines. But when you're getting into all of this, your expectations are pivotal. And the same thing is with trading, right? A lot of people think, I'm just going to start trading, I'm going to start making tons of money, and I'm going to retire, or I'm going to be able to quit my job and stuff like that. Keep your expectations low. All right? Whether it's YouTube, whether it's trading, don't keep you obviously want to have high enough expectations that encourage you to get into it, but keep your expectations low. Keep them reasonable. Understand this is not a fast thing. None of this is a fast thing. It takes a while. So just keep that in mind, guys, and make sure that you're keeping your expectations low so that when you realize the reality of it after you get into it, that it's not going to hurt you emotionally too much. So, but yeah, that's my update, guys. I'm still pushing forward. I'm still gonna make it. We're gonna be huge. It's gonna be huge, right? Man. Yeah, it's gonna be, how many people joke around about that now these days with like just mocking, just quoting that and mocking, that individual. Anyways, that being said, guys, I hope you enjoyed the video. If you're interested in learning more about trading, go check out Tier 1 Trading, guys. Tier 1 Trading is, in my opinion, one of the best trading education programs out there. You got Akil Stokes, Jason Greystone, Charles Miles. These guys are absolutely amazing. They're very, very good at teaching you guys how to trade. They will not only teach you the basics, but they will also teach you the more advanced stuff. They will teach you money management, and they're just going to teach you how to create a strategy, backtest it. They're going to show you a whole bunch of technical analysis chart patterns that you can build strategies around. They're going to show you money management, like I mentioned a couple seconds ago, guys. And money management is really, I briefly mentioned it, but it really is, once you have found a consistently profitable trading strategy, like a trading strategy that has a positive expectancy, money management is the next step. Money management is absolutely amazing. Okay, it's really, really, really good. And it's really kind of the bread and butter of a trader. It's what exponentially grows your account quickly. And now I'm not, again, that's not an income claim. Okay, I'm not claiming income. I'm just saying this is stuff that I've heard of, that it's supposed to be very, very good. So go check out Tier 1 Trading, guys. They won't turn you down the wrong path. They are very, very good at what they do. And I've had personal training from both Jason Greystone and Akil Stokes. They're absolutely amazing. And also Charles Miles, too. Charles Miles and I, we talk to this day. So it's absolutely amazing, guys. They are really, really great about their programs. And it's one of the best programs out there, in my opinion. And I absolutely love it. So that said, guys, don't forget to also check out TradingView. TradingView is a great charting platform. I use it all the time here on the channel, as you guys have seen. It's one of the easiest charting platforms to use. It doesn't require a lot of skill sets. I mean, you can hop in, you can use it pretty quickly. You look up some YouTube tutorials on how to use TradingView. It's actually very, very, very good. But TradingView is absolutely amazing. It really is. It's an amazing, amazing, charting platform, and I love it. I would use it all the time. You can trade straight from the charts with regards to your brokerage account. So if you have a brokerage account that has a deal with TradingView, you will be able to trade straight through the charts. You won't have to trade through the broker platform or anything of the sort. So that's really cool too. That's absolutely amazing. So guys, check out TradingView as well. And also, if you're getting value out of what I'm doing, please help me grow the channel. Help me grow this message. I'm constantly trying to promote this message of financial freedom to as many people that will listen to it, and just to ultimately just spread this idea out there that we are the masters of our fate and the captains of our soul, and we control the outcomes of our life. We control where we go and how we react to circumstances that happen to us that we can't control. But overall, our life is a direct result of our actions and our choices that we make. So our destinies are legitimately, I know it sounds cheesy, but are legitimately under our control. And I think that is a very empowering message. It's a message that I wholeheartedly believe. It's a message that I had drilled into me for years with one of my mentors. You control your circumstances. You control your life. Stop acting as if stuff just happens to you and that you only react, because that is, I think, how the bulk of people live their life, but that is not how life works. The fact of the matter is that you control the outcome of your life. You can make better choices. You can ultimately take your life and turn it into whatever you want. All you have to do is make the choice and be willing to put the effort and the work into it. But your destiny is totally in your control. You make the choice. If you are unsatisfied where your life is, if you're not making the kind of money that you want to make, if you don't have the control over the kind of life your life currently, and you just feel like you have no control over it all, take control. Start making different choices. Start putting forth the effort. Start controlling your life and move your life to the future that you want. And if you don't know the future, then that's a whole other ballgame. You are going to have to sit down and you are going to have to think about what you want your life to really look like. And I think the vast majority of people have not done this, but you're going to have to. Otherwise, this is all a moot point, right? I mean, what's the point in controlling your destiny, controlling your future, making better choices if you don't even know where you want to go with life? So get out there and imagine for yourself. Take some time out of your day and imagine what you want your life to be. Imagine that you've already acquired that dream life. And of course, stop thinking of, well, I don't ever want to work, so I just want to, travel and, just stop. That's a stupid American dream. That is not the American dream. That's what everyone thinks is the American dream, of not working and becoming independently wealthy and all this garbage. No, that's not it. Okay? You need to imagine what the perfect day is working. What if you could do anything if you could do any kind of job in the world, if you could do anything you ever wanted, what would it be? Try to imagine that. And try to imagine what your perfect day looks like. All right, guys, if you will do all that for me, I'll see you guys in the next episode. Don't forget to like the video, subscribe to the channel, and hey, share the content if you like it. Help me spread this message of personal empowerment, financial freedom to as many people who will listen. If you do that for me, see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.